Hello guys, today I am going to tell about Warren Buffett's 6 golden rules of investing. Let's start it. Rule number 1, never lose money. Rule number 2, never forget rule number 1 inch. For Buffett, this is the first and most crucial investment guideline. This rule is more about the mentality an investor needs to have than it is about market movements. Even Warren Buffett can experience loss, but that doesn't mean you couldn't either. He is better than most at living cheaply, though. He has been in the same home since 1958 and always gets McDonald's for morning. His extravagant spending habits ought to serve as a cautionary tale for anyone wishing to invest like him, as well as for entrepreneurs. We must exercise caution when spending our money if we want to become wealthy and maintain it, like Warren Buffett has. Rule number 3, never invest in businesses you cannot understand. In the topic of cryptocurrencies, Buffett is wary of investing in ventures he doesn't fully comprehend. Even saying, "I get in enough trouble with stuff I think I know something about," he has gone to extremes. Why in the world should I invest in something I don't understand by taking a long or short position? By using this guideline, he advises investors to put their attention on protecting their investment by picking businesses and goods they are well versed in. Even while certain businesses or projects may appear to be very profitable, it is unwise to invest in them if you don't completely understand what they want to achieve. Rule number 4, our favorite holding period is forever. Buffett has a track record of identifying well-rounded businesses and sticking with them for a very long time. For instance, Berkshire Hathaway has now held on to its Coca-Cola investments for 34 years. After accounting for reinvested dividends, Coca-Cola stock generated returns for Buffett's firm of 5,810%, demonstrating the enormous value of holding onto the stock. Buffett's success with this approach makes it understandable why he recommends others to follow suit. If you aren't willing to hold onto a stock for 10 years, he advises, don't even consider holding onto it for 10 minutes. Rule number 5, never invest on borrowed money. Buffett strongly advises avoiding entering the investment world if you don't have the necessary funds. He claims that risking all you have and need for something you don't actually need is foolish. There can be instances where you observe a stock performing so well that borrowing money to invest in it seems like the best course of action. You must keep in mind, though, that buying stocks always involves some risk. Even if a stock may be performing well right now, if you purchase it with borrowed funds, its value could plummet and leave you in debt. Furthermore, if you use borrowed funds to purchase stocks, your priority will be repaying the debt rather than developing a long-term plan to maximize returns, which is in opposition to the preceding guideline. Rule number 6, be fearful when others are greedy and be greedy when others are fearful. Buffett's final piece of advice is to steer clear of going with the crowd when making investing choices. You must rely on your personal market knowledge if you want to succeed as an investor. Buffett is attempting to convey that when a lot of investors have favorable opinions about a certain stock, the price will rise. You would overpay for such a stock and not receive comparable returns if you bought it. This brings up the concept of value investing, which is choosing equities that have a high intrinsic value but are currently trading at a lower price. It is crucial to remember that you shouldn't try to stand out for the purpose of standing out, but rather follow your instincts rather than doing as others do. Buffett has had a flawless career in the stock market, but that doesn't mean he hasn't occasionally suffered financial setbacks. Buffett personally lost $23 billion during the 2008 crisis, while his company's profits fell by 62% during the same period. Buffett's experiences should teach you that investing takes continual learning and that picking the right firms to invest in ultimately comes down to taking calculated risks. You should do extensive research on the stock you intend to invest in and use your best judgment when making purchases. Hopefully, you'll be on the road to succeeding as the world's next investing tycoon. This article is meant for informational purposes only. Please make investment decisions based on your own discretion.